Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to podcast episode 77, published on February 25th, 2022, titled The Stocks Topping ESG Rankings and More, and presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing news, commentary, information, and resources. Remember that you can find a full transcript, links to content, including stock symbols, quotes, and bonus material, at this episode's podcast page located at investingforthesoul.com/podcasts. Now, just a reminder, I do not evaluate any of the stocks or funds mentioned in this podcast. Furthermore, if you're concerned about the ESG and sustainability ratings of any stock or fund included in this podcast, check your broker's online site for such information. If your broker doesn't have this information, sign up for free with Morningstar and you can gain access to company and fund ESG sustainability ratings. Please note, I receive no compensation from Morningstar or anyone else covered in these podcasts. Also, if any terms are unfamiliar to you, simply Google them. Now, a point about current volatile market conditions. You should know that in such markets, studies show that companies highly rated for their ESG and sustainability scores usually show superior returns compared to the overall markets. Just a thought in these troubled times, where we all wish for the troubles around Ukraine to get resolved peacefully and without much loss of life. So let's begin looking at As You Sow and Corporate Knights report, Meet the Top 200 Companies Investing in a Clean Energy Future by Toby Heaps, Andy Bihar, Michael Yeo, and Matthew Malinsky. Here are some quotes. The Clean 200 are the largest 200 public companies ranked by green energy revenues. Geographically, the United States dominated the 2022 list with 52 companies on the Clean 200, while Canada had the second largest with a share of 18, closely followed by China, which 16 Clean 200 companies are headquartered in. On average, 58% of revenues earned by Clean 200 companies are classified as clean, which is up from 39% in 2021, and significantly above the 20% average clean revenue for the MSCI All Country World Index, that's ACWI, peers. $10,000 invested in the Clean 200 on July 1st, 2016 would have grown to $20,709 by January 31st, 2022, versus $20,315 for the MSCI ACWI Broad Market Benchmark and $13,167 for the MSCI ACWI/Energy Benchmark for fossil fuel companies. End quotes. The top 5 Clean 200 companies are Apple Inc., Alphabet Inc., Intel Corp., TSMC, and Iberdrola. Another good ranking is the just released 2022 edition of Barron's 100 Most Sustainable Companies. Writing about them is Lauren Foster. Ms. Foster writes, quote, "In the 5th Annual Barron's Ranking of America's Most Sustainable Companies, shares of the 100 companies on our list returned 34.4% on average in 2021, besting the S&P 500 index's 28.7%. 41 of the 100 companies on last year's list beat the market in 2021." End quotes. Barron's top 5 companies are NVIDIA, ON Semiconductor, Crocs Inc., Applied Materials, and Jones Lang LaSalle. Now, Mavis Babcock at topnewsguide.com has penned this article titled Top 5 ESG Stocks to Radar Now. Here are the names followed by some brief quotes on each one from her. 1. Viking Energy Group is perfect for any speculative investor searching for ESG investments. The diversified green company has made 3 recent acquisitions: a carbon capture system that produces sellable commodities from carbon emissions, a medical waste treatment device called the Ozone, and a green renewable diesel production facility in Reno that it is extremely close to closing on. 2. Mattel Inc. The stock has gained 15% so far this year. Mattel is now projecting its 2021 net sales of $5.4 billion and to grow 8 to 10% in the current year. Adjusted earnings per share is seen at $1.42 to $1.48. The toy maker also lifted its 2023 net sales growth forecast to high single-digit from a previous outlook of mid-single-digit growth. Hasbro forecasts growth of low single-digit in both annual revenue and operating profit this year. 3. American Financial Group, Inc. The stock has jumped 58% over the past year and delivered fourth quarter 2021 core net operating earnings per share of $4.12, which outpaced the Zacks consensus estimate by 38.3%. The bottom line doubled on a year-over-year basis. 4. Cnh Industrial Nv. The stock is trading above 34% from its 52-week low and 4% away from its 52-week high. Cnh Industrial came out with quarterly earnings of 25 cents per share, beating the consensus estimate of 21 cents per share. This compares to earnings of 30 cents per share a year ago. These figures are adjusted for non-recurring items. This quarterly report represents an earnings surprise of 19.05%. A quarter ago, it was expected that this truck, tractor, and bus maker would post earnings of 22 cents per share when it actually produced earnings of 36 cents, delivering a surprise of 63.64%. 5. Ternium SA is another stock in the ESG sector which has been showing consistent rise. The stock has moved up 8% over the past 1 quarter. Benefits of higher steel prices and healthy shipments are likely to reflect on its fourth quarter results. End quotes. Considering green real estate REITs? Well, Here's a list also published in Barron's titled 10 Real Estate Companies That Are Both Greener and More Profitable. It's by Evie Liu. I'll just quickly list them. Kilroy Realty, Host Hotels and Resorts, Boston Properties, Ventus, Alexandria Real Estate Equities, Avalon Bay Communities, Kimco Realty, Equity Residential, Equinix, and Brixmor Property. And actually the source for this information is Calvert Research and Management. Now to the next article. Many U.S. ethical and sustainable investors like municipal bonds. If this is you, review this article titled For Greenification in Munis, Try SMI. The article is by Tom Liddon and published on etftrends.com. Here are some quotes from Mr. Liddon. The vast fixed income market is fertile ground for some green fund innovation. Some of that innovation is already arriving. Consider the case of the Van Eck HIP, that's HIP, Sustainable Muni ETF, which debuted last September as the first exchange-traded fund dedicated to green municipal bonds. The actively managed Van Eck HIP Sustainable Muni ETF is managed by HIP Investments, a pioneer in the green municipal bond space. HIP ratings incorporate research that shows which variables are key to improving outcomes. Then, HIP tracks data and metrics related to evidence-based targets and goal, said HIP investor founder and CEO Paul Herman in a recent note. This ETF, which sports a 30-day SEC yield of 1.27%, holds just 44 municipal bonds. That's the result of a high bar for entry created by HIP investors' stringent investment criteria and the newness of green municipal bonds. None of the ETF's holdings exceed a weight of 4.77%. HIP investors' methodology, which precedes the term ESG by several years, uses 5 pillars based on Maslow's hierarchy of needs. These 5 pillars, health, wealth, earth, equality, and trust, can be mapped to ESG as well, adds Herman. Additionally, the HIP's methodology features a dual-pronged approach that focuses on sustainability and education. In the Van Eck HIP Sustainable Muni ETF, HIP ratings also track the UN Sustainable Development Goals, SDG, framework, as well as Climate Threat Resilience Score, notes Herman. California and New York municipal bonds combine for 60.6% of the ETF's weight. This ETF has an effective duration of 5.77 years, and 84% of its holdings carry investment-grade ratings. End quotes. Now here's another specialist ETF that might be of interest to numerous ethical and sustainable investors. The article's titled, "This ETF is designed to help fight heart disease while making you money. Here's how." It's by Josh Myers and found on cnbc.com. Here are some quotes from Mr. Myers' article. The IQ Healthy Hearts ETF is designed to help investors do well while doing good, New York Life Investments' Wendy Wong told CNBC's ETF Edge on Monday. Its current portfolio includes companies such as United Health Group, Apple, Novartis, and Johnson & Johnson. The ETF powered by Index IQ, sees a portion of its fees go towards supporting the American Heart Association's fight against heart disease. The American Heart Association uses the funds to support its Social Impact Fund, she said. This addresses health inequalities in under-resourced communities. New York investment support has accelerated the growth of the Social Impact Fund by nearly 3 times, according to Wong. The Heart ETF is significant in the ESG space as well, ETF Trends CEO Tom Lydon said in the same interview. Lydon called the partnership a great example of making sure that we're not only doing right, but feeling good about it at the same time, and maybe learning how we can help our family do a better job of staying healthy. Heart, the ETF, is outperforming the S&P 500 so far this year, down about 5% versus the benchmark index's 6% loss. End quotes. Now some other honorable mentions, and not in any order. 1. Title: Most active stocks today, 4 renewable energy stocks for your watch list on Nasdaq. By Amos C. The stocks are Enphase Energy Inc., Dayco New Energy Corp., Brookfield Renewable Partners LP, and Solar Edge Technologies Inc. As mentioned in previous podcasts, Dayco is accused of using Chinese forced labor. 2. Title: This top stock is a rock for any renewable energy portfolio. The Motley Fool, from the Motley Fool. By Travis Hoyam. Quote, First Solar was the one that I really wanted to bring to bear for people. End quote. 3. Title: Here are the top 20 BSE 100 companies with strong corporate governance. Report from Business Today. By Rahul Oberoi. Click the link on this podcast webpage for company names. 4. Title: 3 ethical ASX companies with Australian Ethical's Mike Murray on ethical investing in Australia by Rask Media. Recommendations by Mike Murray. Again, click the link on this podcast webpage for the company names. 5. Title: 6 top performing ESG ETFs with high MSCI ratings on money.usnews.com by Aaron Davis and Tim Lawson. Since we've had many of these kinds of reviews on this podcast, again, I'm just to encourage you to click the link on this podcast page for the company names. Now some recommendations, actually one recommendation related to UK stocks and funds, titled Interactive Investors Top 20 Ethical Funds and Trusts on This Is Money by Jane Denton. Quote, the Bailey Gifford Positive Change Impact Fund was the most popular ethical option for investors with Interactive Investor over the past 10 months, new data shows. End quote. As before, and particularly because of the number of funds, click the link on this podcast webpage for the list of the funds. Well, these are my top news stories with their stock and fund tips for this podcast. The Stocks Topping ESG Rankings and more. To get all the links, stock symbols, or to read the transcript of this podcast and more, go to investingforthesoul.com/podcast and scroll down to this episode. Also, be sure to click the like and subscribe buttons in Apple Podcasts, Google Podcasts, or wherever you download or listen to this podcast. And please click the share buttons to share this podcast with your friends and family. Let's promote a better post-COVID world and through ethical and sustainable investing. Contact me if you have any questions. Stay well and healthy and conscious about the ethical and sustainable values of your investments. Thank you for listening. Talk to you next on March 11th, and hopefully by then the whole situation in Ukraine will be on a much happier and even keel. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.